Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
When investment options reduce, you all know today that the number of options are coming down with every passing day. As markets remain strong or get stronger, parts of the market are becoming more and more expensive. This is definitely a challenge to disciplined investing. If you are a disciplined investor, it's very difficult for you to break your rules and go and do investing. If you are advising others and the promise is that you will be a disciplined investor or advisor for them, then you have to stick to the promise. And that is also equally difficult. Because while you promise that you will be a disciplined advisor, you don't exactly extract a counter promise from the investor that he will be with you as a disciplined investor. So it's a one-sided promise. And when parts of the markets are seeing this kind of froth, the investor is also disturbed by what is happening around him. He's seeing his friends taking more risk to make a little bit more in their investments. People are coming and saying that it's easy to make money and that one should take more risk. Whereas on what he's doing with you, you are taking on a path of disciplined investing. He is seeing success in the not so disciplined investing space. So these two are always going to be in conflict with each other. Disciplined advice requires a disciplined investor, and the investor is getting disturbed. That is the crux of today's problem. But these problems don't last. That's the good news. The good news is that markets like these don't last forever. They may become even more volatile before they turn direction. And when they turn direction, investors who took risks will be in more discomfort than investors who are disciplined. That's essentially the reason why one makes a choice to be a disciplined advisor. Because it is in the interest of the investor to be a disciplined investor, and we should transfer the discipline to them. Many people think that advisors are giving them ideas to make money. Nothing can be worse than that assumption. Ideas alone don't make money. The discipline which you show with an idea is what makes you money. Many a times, if you look back, you must have bought great stocks and not continued to own them. You must have sold them cheap. A good advisor should ensure that you don't make that mistake. The same applies to funds. Many people buy great funds and don't show patience. And when they don't show adequate patience, the fact that they bought a great fund does not deliver commensurate reward. So the choice matters, but when you don't show the required discipline with the right choice, the outcome is going to be mediocre or even poor. In markets like this, you must remember this hard truth. Because now you cannot allow your choices to become poorer or mediocre. You must make the best choices and stay disciplined with them. When the markets come down, your choices expand. You have more scope to buy other things. And when choices expand and you get better choices, that is when you add new choices. Until then, you stay with your disciplined choices, which have already been made, where you continue to hold the faith and simply run the process with the required discipline. That's essentially what one can do in the current context, and that's the best thing to do given the market conditions. An investor must have the mind to accept this hard truth and respect discipline in his investing. Thank you for watching this video.